Most tax identity theft starts online, and email is the favorite doorway. The scammer's goal is simple: get you to hand over taxpayer data, login credentials, or employee W-2 details. On the EA exam, they love the big red flag. The IRS does not start contact by email to ask for personal or financial information. If it arrives electronically, treat it as suspicious first. Lock this in. The IRS does not initiate contact by email to request personal or financial information. And it's not just email. That also includes texts and social media messages. So if you see a message claiming to be IRS and asking you to verify a social security number, bank info, or a refund link, that's not the IRS. That's a phishing attempt wearing an IRS costume. Phishing often uses spoofing, meaning the sender address is forged to look legitimate. The display name might say IRS agent or company owner, but the real email address is slightly off. Maybe one letter swapped, a weird domain, or a reply to that doesn't match. Exam tip: don't overthink the tech. The test wants you to spot the pattern: unexpected request, urgency, and a channel the IRS wouldn't use. Social engineering is the human side of the attack. The criminal uses social skills and a believable story, called a pretext, to get access. They may pose as a new employee, a repair person, or a researcher, and even offer credentials. The trick is, they're not hacking computers first. They're hacking people first. If you're tired, busy, or rushed, you're easier to manipulate. Here's the classic W-2 trap. Late January, payroll just finished W-2s. Then an owner emails the bookkeeper, "Send me copies of all employee W-2s ASAP." It sounds normal, and the timing is perfect, but the sender address is spoofed. If the bookkeeper replies with an attachment, they just handed over names, social security numbers, and wages, everything needed for identity theft and fraudulent filings. Your defense is process. Verify the request using a known method, call a known number, use internal messaging, or confirm in person. Don't hit reply and trust the thread. Limit what you send, and only to people who need it for a real business purpose. And remember your professional duty. Tax return information is protected. On the EA exam, they connect phishing risk to confidentiality rules like IRC Section 7216. Under Internal Revenue Code Section 7216, it's a federal crime for tax professionals who knowingly or recklessly disclose confidential taxpayer information to third parties or use it for a non-preparation purpose. Which scenario allows a tax professional to disclose confidential taxpayer information without the client's prior consent? Options include disclosing to an employer to verify a W-2 issue, to a bank handling a mortgage application, to tax preparers within the same U.S. firm, or to Social Security Administration employees. Think about it. The correct answer is disclosures to tax preparers working within the same tax preparation firm in the United States. That's a permitted disclosure for tax return preparation purposes under the Section 7216 exceptions, so prior consent isn't required. A tempting wrong choice is the bank for a mortgage because it feels routine, but that's still a third-party disclosure and generally needs the client's consent. What is Internal Revenue Code Section 7216, and why is it relevant to tax return preparers? The choices include a criminal section with penalties for knowingly or recklessly disclosing or using tax return information, a civil due diligence penalty section for EITC, a civil penalty section for preparer fraud, or a criminal section for preparer fraud. Think about what 7216 is really targeting. The correct answer is that Section 7216 is the criminal code section that details penalties for preparers who knowingly or recklessly disclose or use tax return information. It matters because it's the core confidentiality rule for preparers, especially when phishing or social engineering tries to trick you into sending return data. The EITC due diligence option is tempting, but that's a different set of rules and penalties.